Good morning, good afternoon, good evening, ladies and gentlemen. Today, we're going to be discussing the VBS, short for Velez Buy Setup. But before we do so, I'd like to make you aware that I personally don't trade many buy setups. The reason behind that is, in an imperfect world like the marketplace, I expect a little perfection. I have an extremely high standard for this type of trade. One, I've been burned way too many times. And two, not all pullbacks are buyable. The reason I'm informing you this is this playlist will grow, however, probably not as rapid as the givebacks and the counters, which is what I mainly look for. So without any further delay, let's take a look at the VBS play. First item we need is our igniting move, that 3 to 5 bar run to the upside, followed by a shallow and orderly 3 to 5 bar pullback that must stay within the upper 50% retracement level, meeting the rising 20 simple period moving average and or the 8 simple period moving average. In this location is where we can start looking for a signal bar to play off. This signal bar will reveal to us our protective stop and our trigger entry. However, we are only allowed to enter if the following bar takes out the top of our signal bar, like this. And once you're in the trade, don't forget the most important step, which is to protect yourself. And that, ladies and gentlemen, concludes our VBS breakdown. Let's move on to the pattern recognition in our trading time frame. First up, the 5-minute chart. In this chart, we can see Morgan Stanley had that 3 to 5 bar run. Here is the first 5-minute bar, followed by an inside bar, then bar 3 breaking out of that range, bar 4, bar 5, and bar 6. Next item on our list is that 3 to 5 shallow and orderly bar pullback that must stay within the upper 50% retracement level, meeting, in this case, the rising 8 simple period moving average. Next up, let's move on to the 2-minute chart. Here, we can also identify Morgan Stanley had that 3 to 5 bar run, followed by our shallow and orderly pullback that must stay within the upper 50% retracement, meeting, in this case, the rising 20 simple period moving average. In this time frame, however, we do have conflict. Notice how the 8 MA is above us on a slight downward trajectory. It's worth to note that if one's main trading time frame is the 2-minute, it would be in their best interest to wait for price to get back up above the 8 to avoid taking a long near resistance. Now, let's move on to the 15-minute chart. Notice how MS got above the first level of resistance, but now pulling back after approaching the second nearest level of resistance. Although this looks like a small trading range, this range is actually about a dollar window, more than enough space for a quick scalp. Next, let's analyze the hourly chart. In this time frame, I'm also scanning for areas of support and resistance to avoid taking a trade with limited space before hitting, in this scenario, resistance. As the blue arrow demonstrates, current price is above the 20 MA, posing no immediate threat to our long bias. And although not as clear as the 15-minute chart, we can also see the pivots. Lastly, the daily chart. Notice on this time frame, MS has been trading in this range since October, and the next nearest place of resistance is the 8 and 20. And since we're about $2 away from it, I'm not worried about it. Now that we went through how our setup should look like and our multi-time frame analysis, let's go over the multiple entry options for this trade. But before we do so, if you enjoyed this video thus far and want to see more examples like this, hit that like button, subscribe, and turn on that notification bell so you know every time I drop a new video. Okay, first let's discuss my personal entry method for this trade. In this style of entry, I'm going to use a hybrid approach, utilizing the 2-minute time frame for a 5-minute trade. How and why am I using this approach? Well, the reason I'm using the 2-minute chart for an entry is to get in early on the 5, anticipating a bounce off the 8. Now, I'm going to be clear, anticipation is not necessary. Sometimes when appropriate, I'm just a little more aggressive. So, what is my plan and how am I going to do this? Well, let's zoom in. If you recall from the pattern breakdown, after our igniting move comes our shallow and orderly pullback that must stay within the upper 50% of the move, meeting, in this case, the rising 20 simple period moving average. And in this location is where we can start to look for a signal bar to play off. And that is exactly what I'm scoping for, my signal bar. However, I will only enter if the following bar takes out the high. Keep in mind, all this is happening inside this 5-minute bar. That is how I can take an anticipatory entry inside a 5-minute bar with clear risk to reward. Now let's continue the video so we can see how my trade played out, and I can also take this opportunity to show you the other 2 non-anticipatory entries on both time frames. And there it is, my 2-minute trigger entry on my 5-minute trade. Next is that protective stop under my signal bar. Now, as I promised, I will soon pause the video again to demonstrate to you the other 2 non-anticipatory entries on the 2 and the 5-minute time frame. First, let's zoom in on the 2, and there it is, our signal bar with the trigger entry above the 8 MA and our protective stop under the low. Now let's go to the 5. This is so textbook, I'm actually going to compare this one to our pattern example from earlier side by side. First, we have our igniting move, that 3 to 5 bar run to the upside, followed by our shallow and orderly 3 to 5 bar pullback that must stay in the upper 50% retracement level, meeting in this scenario the rising 8 simple period moving average. And it is in this location that we can start to look for a signal bar to play off. And there you have it, ladies and gentlemen, a textbook look on the 5-minute chart. Anticipation is not necessary. Like I said before, sometimes I'm just a little more aggressive and getting in before the actual complete formation of the pattern. Now let's go to the final part of the video, the trade management. At this point, MS has moved my original risk amount in my favor, allowing me to adjust my stop to break even. Now that I have a risk-free trade, it's time to play the hope game. And hope MS meets my double profit take requirement. That means since my original risk was 20 cents, I'm looking for a minimum of 40 plus cents to take profits. And with only 200 shares, there will be no trail method applied to this trade. Here it comes, here it comes, here it comes, and there you have it, ladies and gentlemen. I got my double and I'm out. I hope you enjoyed this video. I hope you found it valuable. I know it is a little repetitive, but if you still have any questions, feel free to contact me on any of my socials. Link will be in the description box, or you can just drop a comment. Thank you again. Have a great day.